Richard, last year here in Davos when we spoke, gold was around $1,100 an ounce. It's since then risen to pretty much a record of around $1,400 an ounce. You said then we're preparing for a long-term uptick in gold prices. What would you say over the past year has been the big driver of that?
Two things, I think. The first is we've seen central bankers stop selling gold. So actually last year they were a net buyer for the first time in about 20 years. Huh. So significant investment into gold, and the ETF also taking up a significant investment.
Just the average investor jumping in.
A lot of people are buying gold, even in China. We're seeing people who are not wanting to have currency exposure, whether it's U.S. dollars or whether it's Chinese currency. People want to hold hard assets. Gold's a great choice.
Well, they're almost substituting gold as a currency.
Yeah, for sure. And I think that's the other component here is we're seeing weakness in the U.S. dollar, a little bit of strength time and again, but I think we are planning on a depreciating U.S. dollar over the long term. Look, we're 10 years into a gold bull cycle. If it stopped now, it'd be the shortest ever. That's not going to happen.
So historically, I mean, how long do you think that this bull run will be able to maintain itself, and where do you bet that gold prices will go? Are we talking about $2,000, $3,000 an ounce?
I think we're talking about $2,000 an ounce in the next 5 years, and I think we have good legs here to run despite the weakness in the last couple of days. I think we have good legs here for 5 to 10 years. I'd say in the next year we're probably going to look at $1,300 to $1,400, a little bit of volatility. Next year after that, probably $1,500 and beyond.
I've spent time recently in a gold mine in Nevada, seeing the whole process how it's done. It's fascinating. And what I've seen is a huge ramp up in production because it costs gold companies between $300 and $400 an ounce for production, and you're selling at many multiples of that. So how aggressive are you being on the production front right now when you can make such a good margin?
Yeah, it's a great point. We're making a good margin, probably 60% on a gross margin basis. On the other hand, it takes us capital to continue to run the business. So our all-in costs actually are probably closer to $800 an ounce when you add exploration. And what we're seeing is marginal deposits coming on, but particularly in Nevada, we're actually capacity constrained because almost all of our gold deposits now have to go through mills. And so we're mill constrained. And so what we try to do is take the lowest grade, or the highest grade rather, and turn it into gold. So some restrictions on our capability to produce.
But is now the time that you are being the most aggressive?
I'd say gold companies in general produce at 100% of capacity all the time. What you are seeing is additional development in other countries, more exploration. Exploration's ramping up, so we expect that the gold market is going to continue to demand gold. We're looking for 10 to 20 years out to try to find new deposits.
So you're investing in more remote regions, and these are regions, and your competitors do the same. These are regions that are not often politically stable. That creates a whole nother challenge in production. Where are you looking right now, and why is it worth it to develop in these regions given the geopolitical issues?
Yeah, we continue to be interested in West Africa. We have an iron ore deposit there that we're working with BHP in addition to gold. We're looking in places like South America, particularly in Suriname. We're looking in Haiti and places where we haven't been for a while.
Are you already developing in Haiti?
We're not. We've got some drill rigs that we're just sending out. We just got a concession to actually look in the northern part of Haiti. So we're also looking in Papua New Guinea and the Solomon Islands. So we're spread throughout the Ring of Fire. And what we're really continuing to do is to balance geopolitical risk. So over 50% of our production is from AAA countries already, which is what's great about having a big gold company.
So how, as the chief executive, do you decide when it's worth it to go into places like Haiti, for example? I know Barrick Gold, one of your competitors, is working right now in the Dominican Republic, or right next door. How do you decide it's worth it or it's too big of a risk?
I think it's a balance of whether the government wants to accept mining as a way for us to actually come in and help develop. And if we get that kind of acceptance and the right mineral agreement, which is something we're working on as an industry, I think that then we will step in, particularly if we've got a balance of other sort of AAA-rated production to take that risk on.
How open are the governments that you've been talking to in these regions?
Most of them are fairly open. I think, they want to get over the resource curse question, which is it a good thing or is it a bad thing? And I think we have a lot of data now to show people that gold mining and mining in general can actually be a good thing if we do it right, sustainably, and invest in the communities.
There's the environmental concern.
Exactly.
Finally, I know you're very bullish on where gold is going over the long term still, but what are you doing to prepare your company, protect your shareholders for what some argue could be a steep decline in gold prices?
Well, the best thing we can do is to continue to look at innovation to try to make sure that we reduce our costs to the minimum point that we can, and make sure that when we put production in place that we understand what our minimum costs can be. Now, all that said, I think, as I said, with gold prices where they are today, we're making a good profit. If gold prices come down substantially, we won't. I don't know how long gold will stay down.
And how do you protect the investments? I mean, when you move into a region, it takes years and years to really get up and running. So you're betting very long term here.
We are. It's all about relationships. You know, when you enter into a new community, when you enter into a new government, it's about making sure that you invest and that people in the community closest to where we are support what we're doing.
Sure.
And when we get that support, we can be a long-term partner of theirs.
And
that's how we do it.
If you don't have it, you can't be successful
exactly,
in the region.
Exactly.
All right, we'll be watching gold prices.